Hi, good morning, everyone. So welcome to our daily briefing. So today is October 25, which is Monday. So let us take a quick recap on previous important economic data. So the first one is UK retail sales month September. So previous is negative 0.6% and forecast is at 0.5%, but the actual is negative 0.2%, which is lower than the forecast. Okay, so this is not a good news for GBP, for the pound. So the next one is Germany market composite PMI flash October. So the previous is 55.5. The forecast is at 54 and the actual is 52, which is lower than the forecast. So this is not a good news for euro dollar. Okay, and then we go to the next one is EA Euro area market composite PMI flash October. So the previous is 56.2, forecast is at 55.2, and the actual is 54.3, so which is lower than the forecast. So this is not a good news for euro dollar. And then we go to the next one is UK market CIPS composite PMI flash October. So previous is 54.9 and forecast is 54, and actually it's 56.8, which is higher than the forecast and also the previous. So this is a good news for the pound. Then we go to the next one is Canada retail sales month August, and the previous is negative 0.1%. The forecast is at 2% and the actual is 2.1%. So this is a good news for the CAD. And then we go to the last one, if US market manufacturing PMI flash October. So previous is 60.7 and the forecast is 60.3. And the actual is just only 59.2, so which is lower than the previous and also the forecast. So this is not a good news for the USD. Then we go to the next part of our daily briefing today, which is the previous day market volatility recap for gold. The market volatility for gold today is declined 220 pips, then decline. It's rise. I will change it mainly later. So it rise for 220 pips and then it declined for around 300 pips on last Friday night. So what happened? So let us read the factor here. So spot gold fell back on Friday and closed at 1792.65 US dollar per ounce. So earlier it rose 1.73% to 1813.82 US dollar per ounce, the highest level since September 7. Okay, so prior to this, Fed Chairman Powell said that he expected inflation to ease next year. So and the Fed will start to scale back its stimulus plan by this end of year. Okay, so we go to the next one is Wtti Crude Oil. So volatility, it rise for 240 pips on last Friday. So we can see that inside the red rectangle here. So let us read the factor here. So what happened on the WTI crude oil last Friday? So US oil rose by more than 2% in late trading and continued to hit its highest point since October 2014 to $84.22 per barrel. Okay, so because of PEP Plus, oil producing countries alliance only moderately supply the market and also the US inventories fell. So crude oil price rose for the 9th consecutive week and it set the longest consecutive rise since 2015. So we can see that because the OPEC Plus oil producing country alliance that didn't increase the supply, so the WTI crude oil may go further higher. Okay, so we go to the next part of our daily briefing today is when in EU session, we have to focus on this Germany IFO business climate October. So it's at 4 o'clock. So the previous is 98.8, and then the forecast is 97.9. So if higher than expected reading should be taken as positive for the euro dollar, while a lower than expected reading should be taken as negative for the euro dollar. And then we go to the last part of our daily, the next part of our daily briefing today is the market update for gold. So the resistance level of today is 1806 and the support level of today is 1782. My personal opinion for today is still I will still take it as a bullish. So we can see that the market is going higher and higher. Okay, so the gold prices get going higher and higher. So let us read the factors here. So Powell say at an online event hosted by the Central Bank of South Africa on Friday that the supply bottleneck may last longer and stimulate inflation. So this is obviously a risk now. So the rising threat of inflation has created some bullish sentiment in the gold market, despite the Fed Chairman Powell's attempt to downplay these growing concerns. The recent upward trend of gold prices is relatively obvious, but investors are also worried about the Fed tightening monetary policy, which has caused the rise of gold prices to be dragged down. So this week, the trend of volatile upwards may continue. So we're talking about this volatile upwards. We can see that. So the market is going higher and higher because of the inflation. If they didn't settle the supply bottleneck, okay, so the disinflation will getting worse, and then the gold prices will getting higher and higher because of the gold demand is getting higher. Okay, then we go to the last part of our daily briefing today, which is the weekly important CFD shares. Okay, then we take a look on the weekly important shares calendar here. We can see this is a busy week, and a lot of companies are releasing their quarterly earning report in this week. So including the tech giant, which is Facebook, Microsoft, and Alphabet, which is Google, Apple, and also Amazon. So we take a look on this tech giant. Okay, so the first one is Facebook. The key points of Facebook, which is the let's read the key points first. Okay, so the investor should look for more double-digit growth in daily active users. So this one is the first point is talking about the daily active users, and the second one is revenue is expected to soar, a revenue growth, and then the third one is can be social network keep up its momentum, which is widening operating margin. So expense guidance. Okay, so because I will try to make it short, so I just read the key points for you. So but if you read all the article here, read the article here, then you may share it to your client, then I let them to trade our CFD shares product. Okay, so we can take a look on the FB chart here. I mean the market chart here. So this is we can sort. This is a pattern support line here, and this technical analysis is provided by the auto chartist, and the resistance level of resistance is at 330 and the support is 318. So we then look for this for the two prices. So if the earning report is good for the share price, then we will look for the resistance here. So if the earning report is bad for the share price, it's bad for the company, then we will look for the first support line here. Okay, then we go to the next one, which is the Microsoft Corporation. Okay, so let us read the key points here. Okay, so the first one is Microsoft growth accelerated under a visionary CEO, so which is Nadella. Okay, and then the second key point is it transformed from a cloud underdog into a cloud leader. So they're talking about the cloud service. So and also Amazon is doing that too, and also Apple is doing that, and also the Microsoft is doing that too. Okay, so the third point is it could still have plenty of room to grow over the next decade for this company, Microsoft. Okay, so we can so please read all the article here because I can't read it here. I just trying to make it short for you in this daily briefing. So I wish you can read all the article here. So it is very good information. So and then you can share it to a client. They can read it as well, and then they can trade our CFD share product. Okay, so we can take a look on the market graph of Microsoft, the 4-hour candlestick. So this is a flat pattern. The chart pattern is flat, and this is direction is at looking for the bearish here. But we have to focus on the resistance level, which is the 312, and also the support is 306. Okay, so if the earning report is good for the company, then we will look for further upside, the resistance level. If the QE is not good as expected, then we will look for the support price, which is 306. Okay, so we go to the next one is Alphabet. Okay, so which is Google. So let us read the key points here. So the first one is Alphabet's main businesses are still generating robust growth. So this is the first one. And the second one is its stock still looks reasonably valued. Okay. So the third one is the company faces a lot of regulatory headwinds, but it should survive the incoming storm. So this is not a problem for Google. Google is quite, how to say, it's doing very well and it's dominating the market, especially in the search engine, the mobile operating system. They are doing quite well. Okay, so we go to the market graph of the Google here. So we can see that this is a butterfly pattern, and we can look for further down for further upside at the resistance level here, which is the 2840, and the support here is at 2708 here. So if the QE is good for the if good for the company, okay, then we will look for the resistance level here, which is the 2840. If the QE is not, if the report is not good for the company, then we will look for the support price here, which is the 2708. Okay, so we go to the next one is April. So the key points, let us read the key points here. So the 5G transition is just, the first one is the 5G transition is just kicking off and should last the rest of this decade. So this is the first one, and then the second one is over the time the 5G leaders with competitive advantages should thrive. Okay, so they will be doing better and better. They're talking about the 5G leaders. Okay, so the third one is, given the recent weakness in technology stocks, now is a good time to pick up the industry leader. So actually he's the industry leader, so you guys know that, Apple. Okay, so I will guys read all the article here and share it to your client. Okay, then we go to the market graph of Apple here. So we can see it is a channel up pattern, and we will look for further upside, but we have to focus on the resistance level and also the support level here, because if the if the earning report, not QE, if the earning report is good for the company, okay, it's better than expected, so we will look for the resistance level here, which is 152. So if the earning report is not good as expected, so we will look for the support level here, which is the 147.45. Then we go to the last one, the last article here of Amazon. So let's read the key points of the Amazon here. So the first one is, despite Amazon high price to earns ratio, PE ratio, okay, so there's good reason to believe the stock can perform well over the long haul. Okay, so the second one is, management guided for slower revenue growth in Q3 as the company faces off against tough year ago comps. Okay, so the third one is, Amazon will report its third quarter result next Thursday, which is this Thursday, because I found how to say, I write this article on last week, so next Thursday, okay, which is this yesterday, okay, this Thursday, sorry, so which is October 28th. Okay, so let us take a look on the market graph here. So this is Amazon. We can see that this is descending triangle, and we will look for further downside, but we still have to focus on the resistance level here, which is 3,384. Okay, so if the earning report is good, then it's better than expected, then we will look for the resistance, which is 384. If the earning report is not good as expected, it's bad, okay, then we will look for the support level here, which is 3,285. Okay, so that's all for our daily briefing today. So I wish you, so read all the article here and share it to the client, so let them know what is actually happening in the industry, especially the technology sector, so they can share it to them, and tell them we have the CFD share product for all these of these companies, so they can trade our CFD product in under our platform. So that's all for today. So wish you have a good day and see you again. Bye bye.